Welcome to Connecting Thoughts from Qintess. It's a pleasure to have you here, Jamie. So I'll start by asking, right? Is it not normal to have a CEO that at the same time is the CTO of a company, right, in US? So can you tell us a little bit about that, right? Also to understand why you are combining those two roles in one. What's the vision?
Yeah, it's a great question. We do have a CEO. We have a founder and CTO. That's Loveleen. That's my partner in this journey. But president CTO is, you're right, you're correct. It's a unique role. And I'll tell you kind of a little bit about our journey and how we came to be. But the history of BMTX, we were bought by a bank, Customers Bank, and incubated in 2014. And we had the Hire One, or our education business, that was how we dispersed money to students, and we created the bank mobile vibe checking account. And as we grew that business, we then expanded into banking as a service with the T-Mobile Money offering in the United States. So, and that took us to about 2020, where we decided we were going to go public. And part of that decision to go public was Customers Bank had grew through the U.S. Durbin exemption size. So the money we were making on the money as a bank, as a digital bank, was less attractive. So the plan was for us to go public, which we did, and then right behind it, we endeavored to acquire a bank in the United States, because we understand that the power of banking, not just, this is not a US statement, we think it's a global statement, the deposit generation side of a digital bank complements a traditional bank in a very symbiotic way. So we went public, which was, it's never easy to do, to take a private company public, which we did. And then right behind it, we put an application in, and we put in a letter of intent to acquire a bank in Seattle. And they were about $100 million in assets. At the time, BMTX had nearly $3 billion in assets, but you take our combined programs. So the regulations precluded that transaction. So the FDIC did not want that to happen. So we then pivoted the business to say, okay, what are we if we can't buy a bank? We are a technology enabler, right? And in the US, there are stringent rules that you have to have a bank hold the deposits. And in our case, Customers Bank still held our deposits, but again, at less than favorable rates. So we knew we had to find Durbin exempt, a place that was Durbin exempt, so sub 10 billion. That could carry our deposits and wanted to work with us into our future. And we did that in December of 23. We moved the student business to First Carolina Bank. So it's been a great success. We've helped their deposit base. We've given them a national presence. It's really made a difference for both companies, given us a better exchange rate on the money. But in that, to answer your question, how do you have a CTO that's a president? Loveleen and I got together and said, we had a COO, and we had a CTO prior to me being CTO. I actually joined the firm as chief digital officer, and we realized, okay, so really at our core, we're a technology provider. We are literally a software company. If you get down to brass tacks, that we just happen to deliver financial services. So Loveleen and I endeavored to slim the organization down, because if we were going to be a bank, the idea was the prior COO would have run the bank as president of the bank, and I would have run the tech company as president of the tech company. So we just decided to, from a management structure, to keep it thin, create this presidential role, which gives me autonomy across the organization to groups that I normally don't have access to, just as CTO. So as an example, there's a dotted line for the rest of the organization of Loveleen's direct reports and mine. So I can work with HR, I can work with customer service, marketing, groups that report into Loveleen, legal, as an example. I have a much more direct and influential role there. And for us, it was interesting at first, as any new thing is, but now it's pretty natural. Now for us, it's a natural way to operate. The technology, maybe someday I relinquish the CTO title, if we grow big enough. But right now where we're at and navigating the environment we're in the US, we're comfortable with this structure.
Okay. Thanks. It's kind of quite the story between, because it's somehow also telling everyone that CTO by itself, right? It's also an enabler, right? It's also something that can help technology to evolve, right? So market today, right, or in the last couple of years, right, we hear people talking about traditional banking versus fintechs, right? Different models. How do you see that coexistence, right? Do you see really fintechs or banks getting new things to customers? What do you believe is the driver, and how do you believe that coexistence can continue to subsist?
Yeah, so great question. So I think, let me answer it in multiple parts, right? Because I think that's honestly, if we're being honest about the environment that we're in this new world. It's funny. I say to investors, I said, yeah, 5 years ago we were the belle of the ball as a fintech, and now we're next nearly the devil, right? Relative to this idea from the regulator standpoint. I mean, it's been abundantly clear that there's been a seismic shift in how the regulatory bodies, the OCC, the FDIC, the Fed, the CFPB, think about the fintech and their reach. It is not a secret that the U.S. banking system wants banks to control bank-like transactions. It's where the administration is today. It's where those organizations are, and we're kind of indifferent about it, right? We came from a bank. We're one of the few surviving fintechs that went public and are still thriving today. So it's our story. We've taken the position of we can navigate and change our business to meet whatever the regulatory desires are. But the second part of that, I'll say, I've been in financial services my whole life. I started in brokerage with ADP, and then we spun out ADP's banking division. It was really a division of banking for ADP. Then we created BISIS back in the early 90s. So I've done this my whole career. I've seen this transformational technology come into the world, right? Like, I'll give you an example. When the internet was a thing, right, in the 90s, I sat in rooms with people that said branch banking is dead. No one's going into a bank ever again. Everybody's going to be doing everything via the internet. And what do we have today? Let's roll forward 20 years. What do we have? We have another way to bank. We just grab our cell phone and we have another way. It's another vector into banking. I believe that traditional banking is never going to go away. My app is really, we're proud of our app and we're proud of our website. But last time I checked, it doesn't spit out dollar bills. I can't get any money out of my apps, right? I got to go to an ATM. I've got to go to a bank. And if I want to do anything meaningful, deposit a big check. We have remote deposit capture, so we can deposit some checks. But you still need a traditional bank, is my point, right? Most people that have bank accounts, I think this is a global stat. I think there's 4 or 5 accounts that everyone has, right, in a normal economy, and we don't see that changing in the near future. We do think that traditional banking will exist, but we do think there's a place for fintechs. Now, again, that experience, having worked with most community banks in the U.S. and global banks. When I was at Finastra, we operated in 9 countries. So I've been in the French banking system, not Brazilian, not this. We didn't break into this market, but I worked in China, Mexico, Israel, France, all of Europe, pretty much. And the common thread there, I think this is a global phenomenon as much as it is a U.S. phenomenon. The powers that run those ecosystems generally are governments. Right. I mean, let's just be honest. Right. You might say the U.S. is a little different and it's a free economy, but the Fed has very strong power. I mean, just look at the disparity in payments, instant payments in the U.S. versus where we are in the rest of the world. In my opinion, the rest of the world is 10 years ahead of anywhere else in the world as far as a payment model. I mean, I'm in Brazil this week, and I'm loving that I can tap my phone. Most of the places in the U.S., no way can you do that. So I think there's some really distinct differences, but it comes to this point. A traditional community bank in the U.S. or even a regional bank here in Brazil, the amount of money and expertise it takes to launch a digital asset like a fintech might be able to, it's just not the bank's focus, right? Like a Santander, they're worried about branches, where they're at, the traffic. They're worried about their float, their exposure to commercial real estate. You know, they're running a bank. The digital consumption of these larger banks and even use US and small community banks that use the providers, Fiserv, FIS, Jack Henry, they're so dependent upon those providers to give them the technology. Because like our partner, First Carolina Bank, if you look at their whole entire tech team, there's 3 people, right? And you might have 3 amazing people, but how are you going to develop a web app to do micro investing, right? It's something that they wouldn't do. If Jack Henry, as an example, offered it, they might consume it. But then by then it's so watered down and it's not specific. So I do see a valuable place for fintechs. It's just we have to find the right connection point. And you know, in fairness, you know, we don't have a great track record. Fintechs. We you know, if you look around the world, you know, we'll start at the banks. You know, SVB and their collapse. Some of the other what we'd call neo banks before, like, you know, what happened with Synapse, you know, and some of our other peers in the industry. You know, that's not okay. You know, to freeze billions of dollars of customer deposits it's just not a great place to be. So we think that the regulatory environment is a moment in time. We don't think this is the technological wall we've hit, that we can't develop super amazing apps and deliver value to our customers. We just think we're in a highly regulated, changing environment.
Yeah. So talk about kind of seems that customers have a critical role there, right? So you just mentioned about tapping the funnel, all that. So can you really try kind of blame the customers for this evolution? Because you already also talk about, and we'll be talking about regulators in a while, but there are 2 things in here, right? So one that is, let's blame customers for the good things that they are forcing the economy, the finance, the banks to get in the next step. Now, we probably don't talk about fintechs like we were talking about fintechs a few years ago. We now come and talk about open finance and getting financial transactions out of the banks to be done by, I don't know, some retailer, right? So can we really say that customers are the ones driving this?
Sure, I think that's a fair. You know, I think what people want is, at least our customers want, ease of access to their money. And if you take our T-Mobile customers, they're brand affinity. They're interested in promoting the T-Mobile brand. So we do see in the U.S. that is still prevalent. You know, one thing in the U.S. that the rest of the world's embraced is kind of this concept of a super app, right? Where you know, so why can't I do banking where I buy my groceries, right? You know, that type of symbiotic, you know, relationship. So, you know, that speaks to, you know, our investment in what we built at BMTX. We basically rewrote our platform from the ground up 2 years ago. You know, we sit on top of our transaction processing is still that legacy banking infrastructure I talked about from the core provider. You know, our core that we connect to is 42 years old. And we've created an extension of that core that we've written our own APIs that interface to that legacy system. And then we built our infrastructure on all Web 3.0 technology. So decentralized development, right? So there's this concept of decentralized finance. But to me, as a CTO, that starts with the architecture and design principles. Our design of our front end. So, you know, front end is a web and mobile, right? We're a bank, but digital, no branches. Our only way to interact with our customers are through web and mobile, right? Yeah. And we've been able to abstract that and create an ecosystem that allows us to quickly innovate, even though we're anchored to the legacy system below us and anchored to a traditional community bank for the deposits, right? So we believe that the surviving fintechs globally will be ones that can adapt to that type of infrastructure, that type of a delivery model so that they can answer the customer's requests. I'll give you one near example for BMTX, and Qintess was part of this. So some of the Qintess resources that we have employed were part of this. So we launched on April 6th. We took our Bank Mobile Vibe checking account and moved it from a IaaS legacy infrastructure running Oracle and Java to today PAS SQL, .NET, and JSON, common language, and running in an AKS service, consuming all microservices, and with Web 3.0 principles built throughout. And when we did that, so we went live in April 6th. The number one thing our customers had asked for in surveys was a rewards engine. So when you swipe your debit card, could you subscribe to rewards at certain vendors and get cash back and certain perks? And on the old technology, impossible. I don't think things are impossible. I'm an optimistic person generally, but I will tell you, technically, that would have been an amazing lift to be able to build that. So the technology changed. What I call platform transformation we undertook allowed us to launch a partnership with a company called Card, K-A-R-D, in the US. So Card has an API that has their merchant network behind it, and we bolted our APIs for transactions to their APIs. We created a middle tier API, but we're doing real-time transaction data, giving our customers the value and the point systems that they want. And we launched that. The main app went out April 6th. We launched Card in July 7th. So the design pace and our ability to get to the street with features, we think still can happen, which is really to your question. Do we blame the customers for this? We don't blame them. What we want to do as their provider is give them the features they want, and we want digital banking to become their primary banking experience. I mean, that's any bank's goal. If you're in business, so again, Santander, First Carolina Bank, Customers Bank, and BMTX, we all endeavor to have our customers like our product, engage with our product, and use it. So super excited about the future, and I love the customers pushing because it helps. I think it helps.
Yeah. It's a good excuse, like I always say, right? So we can always say, we don't want to do that. We need to spend money, but it's a good excuse because customers are demanding for it. If you don't do it, they'll go to another bank, right? So somehow it's a good push. So we talked about regulators several times already, right? So regulators are there for a reason, right?
Sure.
I always like to think that many years ago, right, you are trading, I don't know, a cow by 5 chickens or something like that, right? There was no regulators in the middle, and it was the old ancient person, right, in the village said, sure, that's fine, right? That's good enough, right? So regulators somehow try to play that role, but kind of people tries to look or somehow look to them as roadblockers, right? So do you think that regulators' next step of evolution will be probably higher levels of controls in business main criticals and somehow processes, and somehow lighten a little bit some of the things that are slowing down the evolution of all of this? Or do you think that regulators always be that pillar, right? That mother or father that are protecting something from happen because the world will end if there are no regulation?
Yeah, great question. I'm kind of indifferent. When we created Bisis and we launched one of the first internet banking platforms with a company called S3 in the US, we actually went and presented to Congress. We presented to the FDIC on how the internet was going to change banking and the fact that the government needed to get out of the way or catch up. I think there's been quite a bit of evolution in the regulatory bodies. I mean, you have some, highly educated people that have come out of the commercial side that are in government today that are help driving this to inform it. So I think the education is there. Do I believe in structure? Absolutely. 100%. I think whenever you're dealing with people's livelihoods, and I put them in the buckets: health, money, and maybe even their prosperity and their jobs and education, that type of thing. Because those 3 pillars, really define in our societies define what success is or what good looks like, right? For us as humans in this economy, and I'll say money driven society, not chickens and cows, right? Or sugarcane or, so I do believe that there need to be rules. The thing that's very difficult, having operated in this my whole career is we need consistency. Right? To operate a business is hard enough, as we all know. To run any kind of business is just hard enough to get your idea to market and to be successful, to be able to pay your people, to have benefits and all the things you need to do to run a business, and then to have the conditions out of your control constantly changing. The regulations coming out that, in the US and I think globally are just hard to navigate. That they're just difficult. So top of the line, I think, yes, absolutely, we support it. Two, I just would say, let's get them out there and keep them consistent. I do think the U.S., unlike the rest of the world, and I'm not going to say the rest of my experience, the rest of the world doesn't have it all figured out, right? Because if you bank in China, that's a very different experience than you would be in anywhere in the EU, right? Let's just say that. And then even Latin America is different than it might be in Europe, right? So it's just I don't think there's a right way to do it. I'm not suggesting that, but I do think consistency across the globe. The one thing connectivity brings us all is it makes the world smaller, right? So we, like me here this week, I had called my credit card company to make sure I was okay to run transactions here. I didn't get declined. The lady on the phone actually laughed at me. She says, "You don't have to call." But I mean, this is my generation. This is where I'm from, But I think number one, I think we do need regulation. Number two, I wish it was more collaborative than it seems to be at times. It seems to be much more of a reaction to an event. The financial crisis of 2008 is an example, right? The liquidity restrictions they put on banks, too onerous. I mean, Dodd-Frank, if you go back before that, they passed a law, requiring that. This is where the Durbin exemption comes from. So it's just this. I understand it's hard. It's hard to have a solution that fits everybody, but I do think consistency would help a big bit.
Yeah. Again, my experience on Europe, I was kind of a big UK bank working, but then I was also in a Chinese bank, and you are right. For me, it's strange was I was working with the president of the Chinese-owned bank, and the confusion of he's telling me saying, but why do I need to explain to the local Portuguese regulator what I want to do? It's my business. Sure. I want to decide. So I don't understand why do I need to ask permission to do something that, right? Sure. So it's the cultural aspect of that also, right? Like you said, it's the globalization.
Absolutely.
So talking about a little bit some buzzwords, right? Cybersecurity, data protection, data privacy, all of that, right? So many companies, entities, right, banks included, right, they look to these regulations also like roadblocks, right? They want to do something, but they cannot store the data, right? So very recently, in the last couple of years, right, telling that the data of a customer really belongs to a customer, and we are just kind of banks or entities are just basically a way to storage until the person decides to take it out, right? It's also true that these somehow put some barriers, some limitations to what is possible to do to explore data, all of that. You always need to ask permission, right? So do you think that this data protection combined with the cybersecurity risks, so is there a good or bad? Is there a way to weight all of these things? Let's go faster in trying to protect, right, from attacks, or trying to get more permission from customers. So where do you see, is this a balance that needs to exist, or you can simply forget it and then go ahead?
Yeah, so no, so for us, the premise that we operate the business under is the client's, it's the client's information, right? At the end of the day, it's our goal. Our goal as a business, not that we make, that's not where we really make the money off of their data. We make money off their transactions, right? So for us though, it's the precursor and the main tenet of trust with the consumer? Do they trust that you're not leaking their information on the dark web? And that comes from cybersecurity, making sure your internal controls are right, making sure your external controls are good enough. And we spend, in the US, we call that PII data. And it is the gold of any financial institution, but primarily banks. So whether you're a credit union, a brokerage house, insurance company, healthcare company, wealth tech, fintech, absolute paramount that information is secure, and there is no mistake. I don't subscribe to the idea that it's not the customer's data. I subscribe to it's theirs. Where I chafe is what's the rule? What's the governmental rule around that PII? And I don't ever want to live in the gray. I need that information in the regulations to be black and white. And admittedly, in the US, it's open to interpretations in a lot of cases. So for me, as president and CTO, I lean conservatively on that space. I'll give you an example. The AI revolution. We use artificial intelligence and machine learning throughout our organization. We use some of your Qintess resources, help to build out that infrastructure operationally for us. But we also want to get to market with some of these tools. We believe that there's some real value-added resources and function we can bring to our customers if we're able to unleash AI. And so we decided about 9 months ago that we would create our own large language model that pointed at our specific internal PII, and we would go ahead and teach it, not an open AI or a generative AI that points at the universe. We would have one that was behind our wall that we controlled in a consumable service from Azure that we own and manage. And I got to tell you that the power of that tool that we're testing internally now is just amazing. It's common language, it's spoken language, to an interface, and things like you ask it, hey, how can I save $1,000 a month? It'll analyze every transaction, every deposit, say, hey, stop going out to eat, don't spend so much money on your car payment, but then do these following things, save $57. And so it gives you a very powerful view of your finances. It's just one simple example. But if we didn't subscribe to it's the customer data model, and it's theirs and not that it were public some way, the simple thing for me to do would be to point that at the open source libraries that are out there, and we would collectively grow in power and what we could bring to market much quicker. But our position on that is it goes back to that client data is our gold, and we cannot share it. It cannot get out. So we take that top of mind, almost regardless of regulation. If the regulations change such that now it's
you still protect it, right? Yeah.
Right. We probably would still take the mantra of that's an untenable leap we're not willing to take.
So let me pick up. You talk about AI, right? So our co-lab, that is our innovation lab at Qintess, right? So we can talk about artificial intelligence, a lot of that. It will take us several weeks to talk about that, but
sure.
Many people talks about innovation, right? And in my opinion, I believe that very few try to standardize what innovation means, right? And the value that innovation can bring, because innovation can literally be something different, right? By definition, right? What's your definition of innovation? What do you see innovation? You gave us an example, right, around possibly functionally be able to advise, right, to be able to suggest, but where do you see innovation playing a relevant role, and what's kind of your definition of innovation?
Innovation for us is, because we're in a regulated environment and we have walls and rules, some see that as stifling. I don't actually. I think there's a handbook for us. We need to operate within those lines, and let's build the best products for our customers that fit inside those lines. So innovation, why I think people struggle with innovation is because every company, and probably divisions within companies, big companies, and maybe even departments within those divisions, are at different levels of maturity to be able to even contemplate what innovation might mean. If you'd ask me if Jamie, hey, do you think you're an innovative company? My tech answer would be no. But my banking answer is heck yes. The fact that we replatformed the entire footprint of 1 million customers, replatformed them in April. And then since then, we've done nearly 400 different mobile releases, micro releases, which enhancements and fixes. Plus, we've launched card and another service I didn't yet talk about. And we've done that inside of 6 months. That's the definition of innovation. But for me, it's more like I think about if I were consulting firms, you really in BMTX we talk heavily about a maturity model. How mature is our security posture? How mature is our audit posture? How mature is our development release process? Because that then informs how fast you can go, in my opinion. If you don't have the basics down and you're not talking to each other about reality of where you're at as a mature organization, then innovation is going to be this foreign concept that you're not going to be able to ever think about or execute on. I've worked at plenty of big firms where innovation was just a dream because the companies were so large that that description I gave you, the department, the business unit, on down, no cohesion. What I really enjoy about BMTX is our size. We're about 300 associates, including our Qintess resources. That's not a big firm. So we can be nimble and make decisions on where we want to spend our prized time, because time is the biggest asset. Our customers and time are it, right? So where do we want to spend our resources to give our customers the best experience? So innovation is elusive. I would not say there's a one size fits all, because I would tell you Santander's definition of innovation is very different than First Carolina's bank, than Customers Bank, than any N24, any of these other, Stripe. They all think about it and execute on it differently. But at BMTX, it's in our DNA to be innovative. It's in our makeup. And really, I would tell you, the platform architecture change is part of that maturity model that then can spark and execute on innovation. And without that, the answer was always no. And it wasn't no because we didn't know what to do. We didn't not have the desire. We were not in a mature enough place to be able to execute. So I do think that the philosophy of the company's maturity and the place that you're in your growth pattern. A startup might be super innovative because it's all brand new, or you might take a company like ours that's 10 plus years old that, has a pretty stable business and a solid background. We might be a little less innovative, but I'll tell you, at BMTX, we're always pushing for better.
Yeah. So it's good because it's almost like, and I'm kind of writing an article on that about also at the same time how the industrialization of software development, right? You mentioned a lot about architecturing, about all of that. So being able to work on an industrialized environment that helps you to speed up the technology delivery, right? So kind of generic question, right? So you talk a lot about technology already, right? So and the difference between traditional banking technology, right? So do you see technology itself, right, has been, and my guess is yes, but has been the backbone of the evolution, not only on the finance, right, but also almost on any type of entity, any type of provider of services, right? So do you see technology taking that curve? Because we always know, talking about ChatGPT, OpenAI, all of that, it's one thing, right? But sometimes, like you also said, that's we are playing with that, right? It's not really bringing that to life and making it happen, right? So do you really see that role of technology almost leading, right, the transformation, the economy, all of that? So do you see that power of technology, or this is just technology speaking?
No, I love the question. So I have a pretty drastic view on this. Having run my own data centers, I started with water-cooled mainframes and DASD drives and X25 connections. So I've been around a bit. I've seen the evolution where you had to make $100 million investment to have any kind of a product that was real. You know what I mean? I just recently did an interview on the New York Stock Exchange floor with FinTech TV. And it was interesting. I used to have a badge. I used to go to the floor all the time. And the reason we went to the floor and the reason we had to have our systems mostly block traders, higher end trading, high frequency trading, early innings of that, they had to be on the floor because of the latency, because the transaction latency of the connections. You go on the floor today and it's basically a big TV set. MSNBC's there, the New York Stock Exchange. There's no real traders. There's some traditional shops that have been there, but by and large, it's a completely different environment than it was just 15 years ago. And why? Why is that? It doesn't mean that there's any less trading. I mean, look at the U.S. Stock Exchange. The numbers we're talking about. I mean, back in the day, it was 3 digits. It wasn't even 1,000. Now it's incomprehensible the number of transactions we do in an hour that we used to do. We wouldn't do them in a year. Just that bit of time ago. So the drastic view is this. I firmly believe in having been in that space and buying data centers. I'm buying real estate, buying air conditioners, right? Buying security systems, halon systems, fire suppression systems, and then the gear that goes in and all the people to run the gear. I think the cloud and what we've done with compute as a resource, as a consumable, I think between at least the big three, Azure, AWS, and GCP, I think are going to be, when we look back at history, are going to be far more meaningful than almost anything in human history. Because I always say the cloud is the great equalizer, right? I would say to you that the word fintech only comes from the ability to operate in the cloud. I know me. I mean, I would never, I would not be where I'm at today with a company like BMTX, without a doubt. So I do think technology is at the cornerstone of innovation, and it goes back to that maturity model, right? So like I share with you, the product we acquired, Hire One, that started our business, that was on servers in a data center, running IaaS. We were running VMware on physical. We had 90 servers running VMware, running a physical Oracle database. That now has been transformed. We're happy to say it's like I said, it's all microservices, all it's the platform as an architecture in containers. And I do think it's the great equalizer. Honestly, I do think when we look back, 50, 100 years from now, and we study this period of human history, because think about it, it's what's given us it's given us an ability to economically use GPUs, right? I mean, imagine, before in the old days, you'd have to use a knowledge center. Berkeley or MIT or NASA would have the supercomputers, and they would be doing. Now, I mean, I can put, if I choose, I could put my personal database on a GPU and have computations done in microseconds if I choose. So I do think, and that is only available. Let's be honest. That is only available for consumption because of what AWS, Microsoft, and Google have done. Period.
Yes. Yeah. I agree. So finishing with kind of a quick exercise, right? I'll be throwing you a couple of topics, right? And I want you to answer to me what comes to your head very simply, right? So there will be no question. So the question by itself is any message that you want to share, right, with someone then listening this, right? And I will be throwing you a couple of things and just be very kind of, if you want to kind of write a sentence or say something to those entities, just spread it through, right? So traditional banks, what do you want to say to traditional banks?
That fintechs are your friend. The partner with a fintech. We can move fast. We're innovative. We have the technology, and partner.
To fintechs, what do you want to say to fintechs?
You're not the answer. I meet too many of my peers. I mean, in fact, I'm headed from here. I'm going to go to Money Live, and then I'm going to be at Finovate the next 2 weeks. And not all too many of my peers have thought that they're the reason that a function exists in banking. It's just not true. What I would say to fintechs is we're part of an ecosystem, so embrace that. Okay. Embrace that we're going to need traditional banks, and we need to support that highly regulated ecosystem and not fight it.
And the technology partners, companies like Qintess, technology partners, what's the message for them?
Oh, we're better together. I mean, our relationship, the concept when I took over as CTO, the fact that we had every development resource at BMTX that lived in New York or Pennsylvania, I knew was holding the company back. I mean, without a doubt, there's talent. My experience operating globally is there's talent across the globe. And it isn't always economics. It's perspective, it's experience, it's globalization of a local problem, is how I view it. And I think partnerships, there's an old saying that we used to say in the military, you want to go fast, you go alone. You want to go far, you go together. So to me, partnerships are part of our DNA.
Okay. So regulators, what you want to say to regulators?
Beep, beep, beep. No. Right now, regulators, just be consistent. Please just have some consistency and understand we don't not want to comply with your regulation. We actually, it's the opposite. We want to partner with you on harm to customer. They're our customers. I know you think they're your customers, but in the end of the day, they subscribe and sign up for BMTX accounts. We want to work together. We want to work in concert.
Okay. And finally, to customers, right? What do you want to say to customers broadly?
Look, what we do isn't easy, and you have high demands, and I don't want you to back off. It's your money. You want things your way, and let's just work together to get the environment, the ecosystems, the applications, and the services you want. Let's just work together because nothing's perfect, right? Nothing in life is perfect. But we work hard every day, BMTX and Qintess and our other partners, we wake up every day wanting to solve your problems. So let's work together at that.
Okay. Again, thank you, Jamie, for this time. I really appreciate the conversation, right?
Thanks for having me.